Hi everyone and welcome to Three Charts in One with me, Richard Perry, market analyst for Infonox on Wednesday the 21st of September. It is the Federal Reserve meeting today and that's a major event for Forex markets, for commodities and indices, and I've got three charts to look out for today. I'm looking at Euro Dollar, the world's most largely and widely traded Forex pair. I'm looking at the outlook for silver today, which has been drifting lower, but is it about to break higher? And also looking out for the SP 500 futures, whereby Wall Street is just sort of again disappointing. So let's have a look straight into this euro dollar chart and where it's positioned. Well, it's drifted back towards again the 99.50 area of support. 99 big figure to 99.50. This area of support in the purple band here has had a frequent event where the buyers continue to return. Now, is that going to continue as the Federal Reserve meeting comes through today? Well, it'll be interesting to see, because the Fed is expected to be quite hawkish today, and that could weigh on the on euro dollar as the dollar strengthens once more. But the technical analysis would certainly say selling into strength. Look at this RSI consistently failing around the 50, just maybe above 50 mark, but still seemingly playing out within this downtrend phase, and this selling into strength that we've had on euro dollar continues to be a key feature of this market. We've got the 4-hour chart here, which you can see the test of the resistance coming in just above that parity level 100.50, and it just seems as though that it's continuing to sell into strength. The downside pressure is still there, I think, on euro dollar for pressure towards the supports. 99 big figure, 98.64 was the key low. I think that we're likely to see that tested at some stage again in due course. Every time we've seen the euro dollar testing to the upside, it fails at resistance and then falls over and makes new lows again, and it's likely to be that is what we see in the future in the coming weeks. Onto the silver chart. Well, it's interesting because gold, very quick look at gold, has broken down below the massive support at 1680. Silver, on the other hand, has actually rallied and held up pretty well. You can argue that this is starting to look like a little bit of a bull flag. It needs to break out pretty quickly, I think, now. That above 50 on that RSI is encouraging, but interestingly enough, in the last 6 sessions, we've had sort of 3 bull failures, and the market has fallen over at lower levels ever since. So it's interesting. It could turn into a bull flag if, say, for example, on the 4-hour chart, you see the market moving above this reaction high of 1970. If you see the market above 1970, that could begin to accelerate the move higher. Above that key reaction high of 20 big figure resistance the other day, if that gets broken to the upside, it also breaks that downtrend as well. So these are the levels that we need to be looking out for on the upside. But what we do still see, as I say, back on the 4-hour chart, is these sort of little lower highs. Although the market isn't falling away decisively, these lower highs are still sort of reflected through the momentum on the 4-hour chart as well. So it is sort of coming back. It is a relatively more neutral position, but certainly not yet bullish, and it needs to, as I say, go above that level of resistance, which comes in at 1970. The reaction low, which comes in at 1877, is the key support on a near-term basis. And finally, on to S&P futures. Well, this uptrend that we've seen on S&P 500 futures has now been broken. Again, another bull failure yesterday. We had this in the last week and a half, where these runs higher get decisively sold off. Little bit of a tick higher at the middle of last week, sold off, and again on Monday, rebound, gets sold off on Tuesday. So still into this realm of selling into strength on S&P 500 futures. You haven't had a decisive breakdown yet below this blue area, which on I'm looking at on a closing basis. If you break down below that sort of 38.80 mark, you sort of are then into the realms of falling away and then testing of the 37.20 area. You've got the corrective configuration still on the momentum. RSI now sort of failing around that 55 area, and it still has downside potential. So there is this prospect of further downside, I think, in due course. It's just that it hasn't really taken hold yet and decisively moved lower. Equity markets still seem to be selling into strength. No one really has the sort of appetite to continue to buy equities on for any real length of time before sort of taking profits and selling off again. And I think that it's going to continue to be a key feature of markets. You've still got these lower highs in place which have formed this downtrend. The resistance obviously comes in from yesterday's high around 39.40 area, but essentially we're still looking at selling into strength, I think, on equities. Initial support 38.40, and that protects the 37.20 area. So with that in mind, I wish you good luck in your trading today, and I will speak to you soon. Thank you very much.